I'm gonna start the recording as well. Open up with a bearish volume imbalance. Here we have a bearish fair value gap. And an old one that we have used already up here. We see the bodies respected it perfectly. That's what we would want to see. And yeah, nothing up here. YM not taking any trades on that today, so I can also close it. We leave NQ open here. And really what I need to do here is to template ICT. We bounced away from the midnight level and we had a inversion fair value gap paired with that. This fair value gap initially was used to support price to deliver into Asia buy side. Once we closed below it, we tapped into it 3 times and used it to deliver lower. Unfilled volume imbalances are also always on my list that I want to mark out on my chart. Like here we have this gap, but we do not fill in this gap. We immediately continue up higher. The other example would be right here where we also have a gap, but this little wick retested the closing price of that previous candle. Now I'm not gonna drag this out because this already has been rebalanced, whereas this one, once we retrace, we initially kept holding support and bounced off this unfilled volume imbalance, rejected, but bodies kept on holding it one more time to redeliver into this fair value gap, and then we continued lower from here, closing right on the daily opening level 4205 and below the first bullish fair value gap. We haven't filled this bearish one yet. This would have been nice to see. London open, retracement into that, continuation lower. Equal low sell side. Couple of fair value gaps here, but really nothing crazy. Let's see. Any 2022 model. We took Asia buy side. We shift structure, but we haven't tapped the fair value gap for the short. So for a valid 2022 model, I would like to see, so right here would be our market structure shift. We took session liquidity, we reversed from the high of the day, but the entry for me would have come from this bearish fair value gap here. Stop loss 3.5 points, target sell side, perfect 5.5 points target, done. But we only retraced up to the midnight level. And right now I don't really need that London Killzone box. So I go down into the settings and I disable show the London Killzone box. And now it should disappear. Perfect. We still leave Asia here. Put things into perspective. We had a 9.5 point Asia range. We retraced efficiently of this entire move to the upside. We are playing with the optimum trade entry here. So let's see. The decision hasn't been made yet. You can't hear anything. Okay, perfect. Yes, I didn't check the Discord chat, so yeah, we had market structure shift to the downside, but we didn't tap that bearish fair value gap yet. Okay, perfect. Now you can hear me. I'm also recording, just in case. But I'm not streaming on YouTube right now. Otherwise, everything would be too laggy and it's almost annoying. We have our power 3. What else could we be looking at? The regular trading hours opening gap is not interesting. Session liquidity, we do not need to see that. I'm right now trying to work out breaker blocks, but I don't know. I mean, even fair value gaps, we have the option to display multi-time frame fair value gaps, but I don't know. I still like to draw them myself. Volume imbalances is a different story. I still like to see volume imbalances, and especially from the 15-minute time frame, and that's what I set it to. And right now, let's remove this volume imbalance and let the indicator show us higher time frame volume imbalances. Right here, 15-minute, 15-minute, and another 15-minute. From over here, unfilled. And we're gonna extend all of them to the right. Scroll back down into the settings. Extend our volume balances to the right. Drop down to the 5. Because I would put more weight on these higher time frame volume imbalances, really. So we can see this volume imbalance here at the London Open also was a 15-minute volume imbalances. We see the change in the intensity of this orange right here. Bounce off it, break below, holding support on this volume imbalance area, continuing back up. Now we're playing with those two again. But nothing's decided yet. We go to the 15. We still see that we fiddle around. We have 7 minutes left on that candle. 1 hour time frame, also a 1 hour bearish volume imbalance. So usually if you get these 5-minute volume imbalances on the new hour, so between 3:55 and 4 a.m. or 2:55 and 3 a.m., that's usually when you have a multi-time frame volume imbalance, a 5-minute, 15-minute, 1 hour, 30-minute, everything that's easily divided by 5. So for example, not on a 3-minute time frame. Good morning, Ragnar. Yeah, well, I'm kind of conflicted here. I would like it to play out. I think I will try it. I'll place my limit order like this. What I don't really like is that we could also bounce from this area here, these bullish fair value gaps like we already do. And I do not want to get caught up with the London Open momentum, which can be pretty strong, where we could see a huge run, or not a huge run, but a decent run to the upside, just stopping me out here, and that would kind of be unnecessary. We already retraced into all these inefficiencies also on the 15-minute. So yeah, I don't know. We see we let it play out. We have Asia buy side. We're not that far away from the previous day's high and or this equal high buy side, which still leads me to believe that we could see higher prices really. But because it's a valid model, I think maybe initially we get a dipper into Asia sell side. So it's worth a try, I'd say. Still on the take profit trader account. We see we tapped it, but we didn't get filled here. We touched our price level, but like I said, we didn't get filled, and we reject from it. Did you get filled, Ryan? Did you had your entry at that same level? Yes, it's good to take it for the consistency. Higher low, higher low, higher low, higher high. So right now that structure is pretty obvious. 15-minute. Pump, 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 pump. 1 hour time frame. 1 hour isn't clean really. Go back to the 5-minute. NQ already took out these lows. Do you see that? NQ already took the low right here from 2 a.m. and rejected, while ES is still struggling. So we have valid SMT divergence. We have the Asia low still in place here at 14,439 on NQ. Let's see if we get tapped. We have some major resistance here, being the daily open and the midnight level. That could hold us. But it's a sign of strength that we see that the slow has been so far respected here on ES, while on NQ, not really, or not so much. We made that higher high, we swept that sell side, and we immediately reject, while on ES, we, didn't see the slow being taken out. We could still do that. That's why I will keep the limit order on. We have a valid 5-minute market structure shift on the 15. Not so much, if we're being honest. We could see a potential. That's what I like about the setup. Left shoulder, head, right shoulder setup, 2022 model, or simply a head and shoulder setup. Depends on who you learned it from. Let's draw our midline here as well. Oh, just leave the entry there. Who cares? Couple of ticks. Doesn't really matter, we're filled. We have the SMT divergence, we've already spotted that. If I see a immediate close above the 5-minute bearish fair value gap, I will get out of the position and cut my risk early. That's not what I would like to see. A strong push out of these bullish fair value gaps down here. Don't forget that, and we seem to be getting that. Get rid of the volume imbalances for now. So we already filled this entire inefficiency. And like I said, what I wouldn't like to see is a close above or a strong push like this, because that would sort of confirm the long for me more than the short. This doesn't mean that it's not playing out, that it, if we close above, that there's no chance that we still continue lower into sell side liquidity. But from experience, once we close above, we would really look at this fair value gap as a inversion fair value gap, and from there on, maybe even use it as support to run out highs. And that's how I managed to cut my risk early. I most of the time still managed that if I'm wrong and we still continue lower, to get back into the trade or into the shorts, maybe at a little or slightly worse price, but so far we're looking good. Now what we want to see is a push back below the midnight level. We do not want to see support from that area where we kept holding support here or resistance right here. During Asia, we didn't really respect that, but we're looking good right now. Nice. Take a look at NQ. NQ did not have a fair value gap here on the 15, maybe on the 5. Yep, we had that same fair value gap on NQ here on the 5-minute time frame. And is it paired with something major? I don't know. Maybe that New York midnight level. Maybe. What did we do here? This was sort of a turtle soup entry. If I would have traded NQ, I would have placed my limit order right above this short-term high. We turtle soup it, we wick it. Stop loss goes above this candle's high. Target this low, or at least the yesterday's 830, or sell side for a almost 3-1. That's not bad. Let's watch it on ES. Let's see if that SMT divergence remains. Oh. Early morning. Here in Germany today, it's a public holiday. All my friends and my parents, they're gone. They went on a little holiday, on a little trip. So only the traders who can't enjoy a free day. But if this trade plays out and we secure 5 points here, I consider myself really done for the day. I'm not trading the New York AM session. And yeah, I woke up early this morning and I thought, like, why no live stream? Like, no reason to not stream. I'm sitting in front of the charts anyway. Maybe I can provide some value. I didn't. I have just above that, but I'm okay with that. What do you mean? Did you wanted to see an entry up here with the OTE entry? That's why I like these low-hanging fruit entries. Yes, I could have placed my limit order here on the 50%, but I don't know, if you place it there and we miss it and it still plays out, it's kind of annoying. Let's take a look at NQ. We're not done yet. We could still get a rejection and continue up higher. If we see that, I'm gonna close. I want to see that close, ideally below the next bullish fair value gap to turn it into a inversion. So far, if you look at the candle bodies, we kept on respecting it. Right here, we closed at the low and we pushed back into our bearish fair value gap, respected it with candle bodies. So now, at least a close below midnight and a daily open again for the daily candle to remain bearish. Ideally, a close below 4203 and a quarter. We have 1 minute left on this 5-minute candle. We have tiny bits of sell side down here. So all the traders that wanted to see the long continuation based on the low, high, higher low, higher high, higher low, higher high, they likely will get stopped out right here if they entered on this potential OTE entry or 61.8 or whatever Fibonacci retracement level they use. If we measure from high to low, that's right where we're at. So for the market structure traders who do not saw the reversal coming, they likely entered long here, and their stops will be resting right here and right here, depending on when they entered. I hope that makes sense. Always try to imagine which side of the traders is getting stopped or being put in a painful position. We open up with a bearish volume imbalance below our bullish fair value gap. So what do? We turn it into a inversion fair value gap. Now we would expect resistance from this order block right here. Up closing candles within a downtrend act as order blocks. Up closing candle, we reprice into it, we continue lower. Up closing candle, we reprice into it, we reject. And we would like to see that same of this order block right here. To continue at least into that sell side liquidity for ES to catch up with NQ. NQ is already again below that. Now we close below it. Our next sell side target here for NQ would be that Asia session low or the current low of the day at 14,439. For ES, if we retrace to the Asia low, if I would have entered with more than one contract, I would target the Asia low, but because it's FOMC day, I'm really going for the low-hanging fruit. 5 points is already more than enough that I'm looking for. Would put the account into 51,750. That's pretty good. More than halfway of passing it. Any questions regarding the London session so far? I mean, yeah, the 2022 model, thanks to Ryan. I don't think if you wouldn't have pointed it out again, I would have taken it. Right at the right time, 4206. 4206. Perfect. You even got in better than I did. One tick above. So now we're in that area of the order block paired with the inversion fair value gap. We have the VWAP above us, the midnight level above us, the daily open above us, this inversion fair value gap above us. And if we take a close look, we look for the lowest down closing candle of this push to the upside, which would be right here. This is our breaker block, so I think we should be fine moving our stop loss at least to this candle's high. Break even would be too risky for me personally right now, but no reason to keep on holding on to that trade if we go back above this high. Unless we chop around here, but I don't really see that as a possibility. We hit the order block paired with the inversion starting to reject. Likely we have some 1 minute fair value gaps in here on this very strong 5 minute candle right here. And Q likely as well, but I'm not gonna be dropping down to 1 minute. Let's see if we can take the profit home. 5 points is really more than enough for me this early morning. If we could get that, we have the sell side liquidity just below. 25 bucks more. 275. Simple 5 points per day. Quick ends model paired with the 2022 setup. Being able to make 250 bucks as easy as that, and then being able to pay them out. That's the cool thing about Take Profit Trader. You have instant withdrawals. So with Apex, you always have that struggle of, okay, you have to wait until the next payout cycle. You have to be above the threshold, blah, blah, blah. Yes, with Take Profit Trader, you have a intraday based trailing drawdown. But if you make profit, you can withdraw it immediately without 100 rules about, okay, you have to be above this balance and you have to request your payout within the payout cycle twice per month. You make your profit, you cash it out, and it's actually yours. That's what I really like about it. I'm working on passing that TPT challenge, and right now I think for the remainder of, I don't know, a couple of days, let's see, takeprofittrader.com. I think until the 7th, they will have have this account, this discount active, where you get 40% off for life, and you don't have to pay pro fees, and that's pretty cool. Having not to pay these pro fees. With Apex, yes, the challenges are cheap initially. You barely spend anything at all. But once you're funded and you pass the challenge, you have to pay the activation fee, which differentiates by the account size. So if you go for a 250k account, you have to pay, I think, like $200 or $250 only for the activation fee, and it's company-wise very smart. Sell the challenge very cheap. People treat it like scratch tickets. They don't actually most of them don't know how to trade consistently profitable. And then once they pass the challenge, they feel like, yeah, they made it to the top of Mount Everest. They pay the fee, realizing that, yeah, we're not quite there yet. And then they have paid the fee, the actually expensive part, and 90% of them will still fail that second stage until they reach the threshold to be able to request payouts. Different companies have different structures, and I think it's good to have the option to choose between them. Get funded with both of them, take Profit Trader, Trade Day, Topstep. They're all good companies in my opinion. So we can see NQ, relatively speaking, is lower than ES is. We could look at some sort of a rejection block. We saw how many wicks we had inside this area already. I'm not a support and resistance trader, but well, I'm not denying that some things work and some things do not. 2-to-1 risk to reward. We could also be looking for more, but I don't really want to be greedy mad this morning. So we're gonna leave it at 5 points. If we hit that, we're done. Even if I see it continues into Asia's sell side for potential 8.5 points almost. Who cares? If I would have entered with more than one contract, maybe yes. Take a partial after 5 points, move your stop to break even, you have secured your profit, you made sure you got paid for the invested time, and yeah, you can leave the chart so you don't have to monitor anything, and you're done. Simple as that. Let's see, do we hit our 5-point target? If you're in this trade, Ryan, and you want to hold longer than I do, just do it. It's just me and my London session rules, so we would have already hit 5.5 points now. But yeah, most important thing for me was to be content with enough. 5 points, 250 bucks, done. So right here, if we go to our Take Profit Trader account, we just added 250 bucks or 245 to that with commissions on fees. Let's see, now is likely the time where we simply continue to drop, but I'm fine with that. We took the sell side. We now have the Asian session low. Let's see if NQ has already taken that low. No, but it's about to. Same setup. What's the time? 4:25. So that's that's the last 5-minute candle within the next 15-minute cycle. So we will see how this 15-minute candle here closes in 30 seconds. This really would be a market structure shift now on the 15. So yeah, framing lower prices is really an option here. Five points for a 3.5 point risk. Boom, let me screenshot that. 15-minute candle close. We started a new 15-minute cycle. I'm heading over to Bento Book now. Join the trade. And yeah, that's pretty much it for me for the session. I will hang around on the live stream for a little longer if you guys have any questions, but well, what more could you want? FOMC, not gonna trade the New York session. Let's add the trade. We went short on ES1. We used one contract, 250. during the London session. 2022 setup. And I'm also gonna add the FOMC tag to it. I'm gonna write that in the notes. FOMC day content with enough. Sticking to rules, 5-point string London. If they made available, I take them. Let's put the screenshot in here too. And add the trade. So the take profit trade account is going pretty well this year. Let's see. Initially we had a rough time, but we made it eventually. So this week we're up 580. We took out the 15-minute low, and with that new 15-minute cycle we retrace. And like we outlined a couple of times before, up closing candles, we would expect resistance from them. So this would be our next kind of continuation mitigation order block. We started up here, retraced into it, rejected, retraced into the up closing candle and rejected. We mapped out this one before it happened. We wanted to see resistance. We had the inversion of fair value gap outlined with that, and we delivered into our target eventually. I don't need that. We turn this into a inversion fair value gap. And NQ, yeah, NQ took the low, so our take profit target on NQ would have been hit. But yeah, same story. Right here we took the low and we immediately get that push up, while on ES here we once again have SMT divergence. We didn't take the low, we just rebalanced this entire 5-minute candle that delivered into our target. That's just the stuff you hate if you're in the trade and you're watching the chart, if you don't set and forget and, like, I don't know, do something else on your computer or with your time. Yeah, seeing, okay, missing your take profit target by a few points, then you see SMT divergence and you see that immediate pullback up. So you lost quite a bit of your profit, and then you're like, if it pushes up higher, I want to get out. I don't know, that's just what it is like for me sometimes. So I'm always happy to secure my profits. 5 points, done, I don't have to worry. Don't have any stress or hecticness involved in my mornings here during the London session. And if I keep doing that, 250 bucks a day, 10 days, that's not a bad salary, I think. Let's see if we have any questions here on Discord. Wait, so take profit you directly could get funneled without taking... No, you understood me wrong. With take profit trader, you still have to go through the evaluation. And if you do that, now I'm not gonna open it right now. Regular evaluation like all the other future prop firms, 6% target, 5% drawdown, end of day drawdown, and yeah, you have a $1,100 daily loss limit, and you have to pass that challenge first before you advance to your pro account. Right now, with the current discount, they don't have pro account fees, so you actually end up saving 200 bucks on a 50k account because you get that 40% discount, and you save 130 bucks not having to pay the pro account fees. It's pretty good. Make sure to use the link on the Discord right here inside the funding section. Right here we have the link for TPT and the link for Apex. I think Apex still has kind of the upper hand if you want to practice and you you don't want to spend too much. Can already be pretty grateful because CFD challenges are a lot more expensive, and yes, they have easier rules, I think, because you have 10% static drawdown. That's pretty cool. Here we only have 5, and with Apex it's actually trailing, which sucks. But well, they're cheap. Cheap oftentimes doesn't equate to better. We hit the order block, we reject it, and we open up with a new bearish candle. Let's see if we get that continuation. Take a look at NQ. NQ rebalanced the candle, took sell side, but bounced off our support level. Trade some support and resistance now. Okay, you signed up with the previous offer. And I think after Take Profit Trader, there's still one firm that I think right now has the upper hand even against Take Profit Trader, and that for me would be Trade Day. I've talked about all that in my futures funded account review, because once you're actually funded, you have the same rules that you have with Take Profit Trader, except for the intraday trailing drawdown. It's still being calculated end of day. So once that Take Profit Trader account is done, I might sign up for a few more with TPT and copy them, because with TradeAwait you have that inbuilt trade copier where you can create a group of accounts. Let's see. Let me open it up. If you have multiple accounts under the same account name, you can sign up with up to 3 Take Profit Trader accounts. You can put them into a group. Would you look at that? That's the 1 minute time frame. We didn't even look at that. But here on TradeAwait we see, okay, we got that displacement down after we've been filled right here. Took our profit target, SMT divergence, bullish fair value gap. Well, don't want to freak anyone out who's in that trade. But yeah, if you have more than one account, you can put them into a group here on TradeAwait, and then they all copy the trades from each other. It's pretty cool. Any question, guys? Otherwise, well, what's the time? It's 4:35. I might start working on the explanation video about all the settings inside the ICT all-in-one indicator. Yesterday I finished a YouTube Shorts. It's incredible how much time you spend on editing a video that only takes 30 or 40 seconds. One-minute time frame. We have a unfilled volume imbalance right here. Bearish fair value gap paired with a bullish fair value gap. Missed the sell side liquidity by a few ticks. Buy side above both these highs. Open up with a new bullish volume imbalance, but we're still getting rejected from our bearish order block right here. This up closing candle, same way as we did right here, and right there. Nice. Look, earlier, remember at the beginning of the stream, before I turned on the multi-time frame volume imbalances on the indicator when we did our markup, and I marked out all these important fair value gaps, at least important to me. I also, because it happened between 2 AM, marked out this unfilled volume imbalance. And would you look at that? That's pretty nice. So where did we end up turning around? Initially, I treat them like a fair value gap. Sometimes with a even, with more meaning or focus on them, especially if they're unfilled and we see them being respected. Right here, we respect with candle bodies. I don't care about the wicks. We bounce off it after opening right here at the low until we close below it. And we have this bearish fair value gap paired with this old unfilled volume imbalance. We read price into it and we continue lower. So really beautiful, very beautiful price action today here on ES. That's why I like trading ES so much. It's so damn precise. It's easy. It also has an easier time to be this precise because you have less decimals. ES is hovering around the 40 thousands, while NQ already got 1 decimal more. Might not sound like a big difference, but I think it is. So if we have fair value gaps, it's much easier for NQ to close above it with 1 tick or 2 ticks and still continue lower because it has more decimals. While on ES, between YM and Q and ES, you have the lowest price right here, which makes it easier to actually respect certain levels. Let's go. Let's get Ryan his profit. Order block playing out. Didn't even close above our red line. Ryan, being in this trade, watching it retrace, watching hear me talk about the 1 minute blah blah blah, did you get worried about the trade, scared even? Had your cursor already on closing the trade? That's sometimes what I do if I'm not really sure and I have my limit order and I'm already hovering over that X until I see that last uptick, like something right here where I press close and then it's reversing on you and would hit your take profit target anyway. Does that happen to you too? Curious. Perfect price delivery. We had this 2 a.m. Judah swing above the Asian session high with our market structure shift, 5-minute fair value gap, paired with a volume imbalance, paired with a order block where we check from there. We secure profits after 5 points on this candle. And from there on, we pretty much found resistance on every set of up closing candles. Short, short, short. Final TP. What it's going to do below the Asian sell side liquidity? Well, I don't know, and I don't have to know. You don't have to know what the market is going to do 100% of the time. Of course, we could simply retrace a little of yesterday's range if we look at that and use our retracement tool. We measure from the high to the low. Optimum trade entry would be down here, and if we use our PD array, that's the 50% from yesterday. Sell side liquidity below the 50% would be all the way down here. I don't know, I don't care, it's FOMC. That's the beautiful thing about it. You take what's yours and you're done. And just because you knew what the market, or you anticipated correctly what the market is likely to do, doesn't mean that you're gonna anticipate it correctly next time and you give away your profits and then you're mad because really the plan would have been to take your entry, take your profit and log out of your account. And no, you didn't follow that rule and you most of the time do everything to make back that initial profit you have made, and you take lower quality setups and they don't play out, and now you're back at 0, or worst case scenario you're in drawdown, and then all you can think about is, I have to get out of that drawdown. I want to get back to my initial profit. Of course, On the other side, it could also play out that second entry and you make more profit, but it's really not worth risking that much mental capital, in my opinion. It's really not worth it. And I've done that again and again and again. It happens, but you have to learn from it eventually. Might face the same issues. Let's open up Train View. Yeah, it's very common. Most of the time, if you realize that you struggle with a specific thing, like I was talking about, that initial profit target, we're traders, we're all the same. We're not that much different. We're all human beings with the same DNA, with same evolution about money, blah, blah, blah. It's hard to think completely differently. Yes, we don't want to be beaten. No one wants to lose. No one wants to lose money. If someone gives you 250 bucks and you go out and you open your wallet and you see they're gone, what do you feel like? Annoyed, angry, where's the money, looking everywhere to get back your money, and same with trading. It's not different. TP hit. Well done, Ryan. Do you trade minis or micros on your 25k challenge? That's a solid 8.25 move. And we continue lower. Well done. Well done. Power of 3. Manipulation move. Judo swing to the upside. And what do? We measure from our high to our market structure shift low. We use the ICT standard deviations. And right here we see we hit our first standard deviation. So that's being measured if we would draw a box from the low to the high. And we copy that and put it down here. Then we hit 1 standard deviation. From here, 2 standard deviations would deliver us way past below the Asian sell side liquidity pool. We do not have SMT divergence anymore. If we close below this candle slow and we maybe even close below Asia sell side, we would have a new order block to look at. Eventually it's going to be time to retrace. We didn't have a quick sudden move to the downside. Of course we could simply continue this, but I think most of the bulls have been punished or got liquidated, and once that is done we either collapse or we see some hesitation. And that hesitation oftentimes leads to shorts being targeted to get stopped out. Keep in mind, it is FOMC, and all we did right now is consolidate. We form a low, we form a high, we take out the high, we take out the low, we take out the high, we take out the low. And it's not uncommon to see that prior to the FOMC news report. We immediately get rejected. Let's wait for this 5-minute close. Didn't hit the 1.5 standard deviation. Let's see where it would end. 4 standard deviations would roughly bring us to the lows at 10.30 right here from yesterday. Sell side below the 50%. And while we're being added, I wanted to do this in a video, but since I'm gonna upload the recording anyway to YouTube, we can look at yesterday's price action. You guys up for it? I mean, Ryan, you're done? I'm done. MES, okay, fella, gotta start very soon. Good to trade with you this morning. Yeah, it was a pleasure. Well, if you have a couple of minutes left, I can explain it. So right here, let's turn off this drawing. We're done. Let me log out of my account so I make sure I don't do anything stupid. Happened before. And we turn on all the drawings I shared yesterday on the Discord. So right here, this is yesterday's price action on a 5-minute time frame. Let me turn off the Killzone boxes for me to show that to you. We need the midnight level. So let's go into replay mode. Let's see how laggy my chart is. What's happening? What's happening? There we go. So with the standard deviations, we only look for possible targets, same way as a continuation trader would measure initial move to the upside. They wait for the pullback and then they look for standard deviations of the up move. They enter on the pullback, maybe the 50% or something, and then most of the time they target 0.618 standard deviations to the upside or 1 standard deviation to the upside, because that's what we would expect. We make our high, we pull back, and we continue with that next price leg. The idea behind this is that we had our initial move up and we simply deviate this movement to the upside above the high to roughly get ideas of where we can take profit. Nothing new. ICT didn't reinvent the wheel, like I always say. Just a different way to look at it. We have our market structure shift on the 5-minute right here during the 8 a.m. Or so before the New York Open. We measure from the high to the low. You can see right here in regards of price action that we formed a low, a high, a higher low, a higher high. We pulled back, forming a higher low, made a higher high, a higher low, and another higher high. Pretty simple. So the market structure shift really would come in right here on this candle. To redraw it, we close below on that same candle, leaving behind bearish fair value gaps, breaker blocks. Breaker block would then be the strong closing candle. From here to here, we come back into the breaker block. We continue lower. And what do? We measure the standard deviation from this last manipulation move. And the manipulation move is always that last fake out to the upside before we shift structure. We measure from the high to the low in the bearish scenario and from the low to the high in the bullish scenario. And then we look at possible targets. So 1 standard deviation of this last manipulation would deliver us right to here. We paused before we actually took it out. And then we can see if some specific standard deviations, like the 2 or 3 standard deviation, lines up with liquidity. If it does, we can hold the trades with more confidence. And right here we see that the 3rd standard deviation perfectly aligns with the London sell side. And if we measure our displacement from high to the low, like a trend trader would do, so the trend shifted, we get our pullback to the 50%. And same way as we looked at it right here, we measure our initial trend, our initial swing, we get our pullback, and we use the 1 standard deviation of our initial move to the upside to get potential targets. Here we do the same thing, but vice versa. We displace, we measure from low to high, that's where this Fibonacci tool comes from. We retrace to the 50%, get rejected from the breaker block paired with bearish fair value gaps, and we continue lower. Where's our -1 standard deviation of this price movement right here? From this high to this low, our displacement leg. Afterwards we retraced. We would look for the same distance from this high to this low, and this is exactly this level. Aligns perfectly with the -3 standard deviation of the manipulation and this London sell side liquidity. That's how you can use all these deviations to get an idea for potential profit targets. Let me get rid of that market structure here to the left. All right, and then we took out the London lows. It's already post 9:30 a.m. we took out the London lows. We have big SMT divergence with NQ because NQ actually took out this low of the day. And right down here, we had even more divergence because NQ didn't make this lower low, only ES did. And where did we bounce from? The New York midnight level. It's not a random level, that's why I have it included in the ICT all-in-one. If we look at the same level every single day, it's something that we can use as a constant within our trading. We could use the 1 a.m. open, who cares? If we look at it every day at that same price level and we treat it with respect, it's gonna work. Eventually, we bounce off that midnight, we get our market structure shift right here. So we form a low, we pull back, form a lower high and a lower low. Get our displacement here on the 5-minute time frame. We close above this lower high. We have our breaker block being this candle. We get our expansion to the upside. We use our Fibonacci retracement tool. We perfectly tick the OTE entry, lining up with the breaker block and a bullish share value gap, and we continue to expand to the upside. But until we started into the, let's say, lunch hour, once lunch hour was over here at 1 p.m. New York local time, that's why it's always important to be ahead of time, 1 p.m., exactly at 1 p.m., not 10 minutes before, 10 minutes after, exactly at 1, when the lunch hour is over, we took that AM session buy side liquidity. Right here with this wick, we open up with a new volume imbalance. We claimed this old breaker block right here. I used this one initially. We close above it. We have that orange line as the previous day's high. Close above it. We retest that entire old breaker block. What do? We measure from our low to our high because market structure wise, we form a low. We form a move to the upside. We pull back, another expansion. We pull back inside of the OTE entry, continue up higher off the breaker block. And if we look at all the deviations to the upside, so we would measure this price lag. Oops, I didn't want to do that. I hope you guys can still follow me from this high to this low, and we want to see where the negative 1 standard deviation is. We had our pullback and a continuation up higher, so we measure from this OTE entry to this high, because afterwards we got the retracement to another optimum trade entry, overlapping with the VWAP right here, this black line, and the daily open, and this bullish share value gap, and this old bullish share value gap, which we used as support before, until heading into the PM session after 1 p.m. New York local time. 1:30 delivered the breakout above the high, and from there on we simply continued further to the upside. Now let's see where all these standard deviation targets line up with. One standard deviation of this initial displacement to the upside is right here. One standard deviation of the second move higher after we pulled back into the optimum trade entry and continued higher away from lines up perfectly with that one standard deviation of the initial displacement leg. So we can see these levels, they all match up. If we look at that last optimum trade entry, negative 1 standard deviation is also within that area. And what do we hit? Yes, we close a little bit above it. We consolidate, we retrace, we touch this level again, leaving behind the previous day's high that we're looking at, Monday's high. If we go out of the replay mode, we see we hit that and we pulled back. Enough of a movement for today. I mean, this essentially was if you got in on the optimum trade entry, a 35-point move. Without news on a Monday, that's pretty good. That's how you can, use all the ICT concepts combined. Yesterday was a perfect example for that. You really you can't deny it. It's maybe not how the algo works and how it's coded, but it gives you a damn good idea of what it does. And if you use it to your advantage, it's really helpful. I hope that helped. If you have any questions about that, make sure to let me know. Yes, it is a long process, definitely. It is a long process, but I enjoy it. Always like that. Um, yeah, I hope it was helpful recapping the analysis that I posted yesterday on Discord. Potentially one SilverBullet entry opportunity, 2022 model number 1, 2022 model number 2, after taking session liquidity or after taking out external liquidity such as Friday's high, previous day's high. We had 3 possible optimum trade entries. The first one right here, the second one right here, the third one right here. During the PM session, we had the -1 standard deviation of this displacement leg of our next movement to the upside, where we once again hit the optimum trade entry. We had our breaker block right here that delivered into sell side. We had our breaker block right here that delivered into buy side. We used that old bearish breaker block and reclaimed it, turning it into a inversion breaker block, if you want to call it that, holding support on the optimum trade entry, which helps us pushing price towards our 1 standard deviation target. And once you're up here, well, of course, sometimes we continue, but then, like always, ask yourself the question, what time is it? What have we done today already? How much did we move already? Then you see, okay, it's 3 p.m. We get a new hourly candle in 5 minutes. Will this be positive or negative? With that new hourly candle, we eventually deliver into our 1 standard deviation targets. After that, we start to retrace. Does it make sense for the market to maybe make another leg higher? Is it really necessary? If you missed all of this and you didn't manage to get anything out of the short all along, well, so be it. You don't have to chase a long position now at the high of the day. Doesn't really make sense. If you missed it, just accept the fact that you missed it and improve it so you can catch it maybe the next day or next week. But after hitting this major target, if you look for the continuation long, I don't think that makes a lot of sense. Then it's more about forcing a setup because you're not feeling happy about your trades or about your analysis because you missed all that, and yeah, trying to prove it to yourself that you are a profitable trader and that you can do this while actually you're forcing something with lower probability. All right, we're close below the Asia low. We start to retrace once again. This would be our order block, those 2 up closing candles. But after taking this major sell side, I wouldn't be surprised if we see some movement to the upside. Same goes for NQ. Order blocks or mitigation for the continuation lower after closing below that level. We will see. I will keep everyone up to date on Discord. All right, Ryan is likely at work now. Ragnar, do you have any questions left? Maybe about the analysis from yesterday or about this London session? We took the 2022 model. I'm not sure if you were here for it. Me and Ryan, we got in right here on this bearish value gap after we shifted structure, taking out the Asian session high. I had my limit right here. Ryan had it 1 tick above that. I took profits after 5 points. Ryan secured at the Asian sell side. Really good job here. He kept on holding. Worked out for him. It's all about getting that practice in. London special. My coffee is empty. No, I still got some coffee left. Still problems to see the breaker block. Well, what helped me is really to think of it as old resistance or support flipped. So whenever you get the opportunity for a potential breaker block, so we have our trend, we make our higher highs and higher lows. Every time we form a low, we look at it as support. We would expect support here. Let's make this a little bit smaller. We would expect support here, and in the same way, we would expect some resistance here. and we would expect some resistance here once we push above it. So this is very simplified. On a 1 minute time frame, we could bump into this, retrace into a optimum trade entry, and then continue higher. But the same way as we would, let me actually make this a little bit different. Old resistance is now, if I change this here a little bit, now turn into support. And now we have old resistance paired with new support. And now we break the structure. Just think about it in terms of support and resistance trading. We displace below the support, and what happens now with this old low or the support level becomes resistance. At least that's what we would expect. Then we hold support on this old support. We retrace maybe to a 50% or hold resistance on our old low, where we now in bearish market structure would expect resistance right here. This is a low. We broke below it initially. We expected support here to maybe continue higher and invalidate the model. Now we close below it, closing below old support, flipped into resistance. We maybe continue back into that resistance level before we break the support level. And once we broke the support level, what do we expect? Resistance. Now we're back at square one. We have old support here. We might get into that, reject a little, then continue lower. Now what would we expect from that old support level? Resistance until we deliver into the major objective. I don't know if that helped you, but I hope it did. So I really always just look at it as old support being turned into resistance. We break. Pretty easy to map out that lowest point between our high and our last higher high. This is considered our manipulation move. This is considered our displacement move. And then once you have your high and you see your displacement, you look for that lowest down closing candle, which is usually somewhere around here. You draw out your box. This is the old support level turned into resistance now. In terms of standard deviations to the downside for potential targets, you would measure from this high to the identified lowest point between this high and this high right here. We see a -1 standard deviation would be right here. We had our displacement. Now we have a couple of fair value gaps. What we could do for the displacement leg is use that same optimum trade entry. It's not lining up with our breaker block, but most of the time it doesn't. We see the retracement into our breaker block. Old support being turned into resistance to deliver in our standard deviation target. It's always the same. Of course, sometimes it's more cleaner than not, than other times. And if we go down to, we can do today. We take session liquidity. We reverse from the high of the day. We form a high, low, higher high. This is our market structure shift level. We close below it. We leave behind a inefficiency. We also had the breaker block right here. Rejected from that. The breaker block really was sort of violated, but I mean, I do not expect it to hold perfect resistance always. It's just a concept. It's a super tiny little candle, while we have the London Open right here at 4 AM, and we can expect more momentum here compared to 2:30 AM prior to the London Killzone even. Continued lower. Yesterday was a much better example for that. Breaker block, last highest up closing candle. Sometimes during the New York session, where price is moving rather quickly, the breaker block would look much better if you drop down to the 1 minute time frame. Let's see where we're at. What would we do? So we got our lower low, we form our low, we took our session sell side liquidity, we're at the low of the day. No, we're not at the low of the day, but we took out that liquidity. We have SMT within Q. We form our low and a lower low. What do? We look for that highest point, and that highest up closing candle would be right here. I always use the wicks, and I even like to include this last bearish wick right here, because that's really where the structure shift came in. We measure from our low to our high of the displacement, got our optimum trade entry, perfectly aligned with our 1 minute bullish fair value gap. That's inside our breaker block. So we see that overlapping confluence here, breaker block, optimum trade entry, bullish fair value gap. No, not inversion, fair value gap. Yeah, I hope that helped. Let me know. It's all practice. In the end of the day, that's what it comes down to. And if we look at today's price action on a 5 minute time frame, we already spoke about that. We saw that same thing, but yeah, every day is a little bit different. And yeah, it's about getting that practice in until you see that. That's why I also don't really want to, I mean, lots of people are asking me to include breaker blocks into the ICT all-in-one indicator, but I think that might not be the right thing to do. Seeing or getting notified when we have a breaker block, I think you should be able to identify breaker blocks and fair value gaps, important zones, blah, 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 by yourself instead of an indicator. That's just my opinion. And eventually gonna get there. Old support, turn into resistance. We form our low, high, higher low, higher high. Between this high and this high, we look for the lowest down closing candle. Done. 15 minute. Same way here. We form our low, high, higher low, higher high on the 15 minute time frame. Our breaker block would basically be, let me get rid of this entire, no, I need that later on for the post. We look at the lowest down closing candle, which would be right here as our breaker block between our highest point, our two highest points. We look for the lowest point. We have a bearish candle, actually a array of bearish candles. So theoretically, we could look at all these down closing candles as our breaker block. We tap inside of it a couple of times now for the continuation lower. So right now there's still a higher time frame setup in play if you wanted to. But always that lowest point, old support, turn into resistance once we close below it. And for me to close is really important, because otherwise if I have my level and all we get is a wick above it, that's not confirmed to me. That's a confirmed stop hunt for me. Alright, I enjoyed this morning. Any more questions about breaker blocks or maybe something else? Otherwise I'm gonna end the stream here. Coffee is empty. We made some profits this morning. Explained a little bit about breaker blocks. We recapped yesterday's price action on a 5 minute time frame, which really was spot on. I didn't see all of it. Of course, some parts are hindsight. But it's about training your eye to see those things, recapping days, blah, 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 because then it's much easier for you to see in the future. Alright, I guess there are no more questions right now. Thanks very much for joining the stream, and yeah, ask me questions, because that really, yeah, I really enjoy explaining things. So never be, I'm not want to say afraid, but too shy to ask questions. That's what I'm here for. So yeah.